extensively on we spoke extensively on market structure the last time. I believe I gave you those characteristics of market structure in the last class that we did. We
Yes,
spoke extensively about
oh,
market
yes, they
structure.
did. Yeah. Now we have three main market structures.
Yeah,
We have
exactly.
the upward trend, that's the bullish,
Mm-hmm.
the downward trend, that's the bearish. Then we have the consolidation mode, that's
Yeah,
range. Yes.
yeah. Then we talked about the characteristics of those different types of structure. All of the characteristics, like for the bullish market specifically, the bearish market specifically, and the ranging market specifically. Then we went to do like examples on the charts and stuff like that. I don't know if we mentioned change of character in that last class. Do we?
No.
Or did we mention change of character? So I think we should just start from there. So that change of character has to do with like a reversal, right? Because in that particular class, we just talked about the structure and how the structure forms and everything. But I didn't
Mhm.
really show you how the structure can change, like how the market can now reverse. All right, so all of these things are okay. So, for example, right, we're having bullish market structure. We can see the market creating structure like this. Of course, we're seeing the breakout structure to the upside around here,
Mhm.
right? The market is pulling back, is continuing to the upside, is pulling back, is continuing to the upside. Now, the trend, because now this market is setting to be in an uptrend, right? The trend is not going to continue, till infinity. There could come a time where, just like the nature of the market, you can see that there's a push to the upside, there's a pullback. There's a push to the upside, there's a pullback. There's a push to the upside, there's a pullback. Now, this entire push, okay, can also be a leg of its own. It can also be considered as a leg of its own. It can also be considered as a trend. All right. This trend that already has this structure can also reverse to reverse. So if this trend is going to reverse, what are we going to see happening? How is this trend going to reverse? Now, in a bullish market, we're expecting the market to continue creating higher highs. All right. So in this type of market here, we are expecting a pullback and the continuation to the upside. Why? Because the market is bullish. The market has been bullish for a while. We're still expecting the market to go up. The market has not given us any sign that it wants to come down. Okay. So our expectation here will be what I'm going to change the color to blue right now. This is what we're expecting from the market right now. But what if this expectation doesn't play out like this? What if the market does something different from this? And what are the things that the market can do? Instead of it pulling back and continue to the upside, it can just pull back, and that pullback causes a break of structure to the downside. That break of structure to the downside is what we know to be the change of character. So simply put, right, a change of character in an uptrend is a break of structure to the downside, because we know that the character of an uptrend is for it to keep making what? Higher highs. But if it's now breaking structure to the downside, then we know this is not the character of an uptrend. That's the character of a downtrend. All right. Since it's breaking structure to the downside, we can say this is change of character. It's a change of the bullish character that we already know. It's now doing something different from what we are expecting it to do. Now, the change of character, right, is not an indication that the market has already reversed. Okay. The change of character is an indication that it's possible that a reversal can now come in. It's possible that the market wants to now reverse after that change of character. But the change of character in it of itself is not an indication that we should just start selling the market because the market has changed character. Because even after a change of character like this market can still continue to the upside. Okay. It's possible for the market to still continue to the upside. So if you say because the market has changed character, you now sold from here, maybe you put your stop loss above this, then obviously the market continues to the upside, you're going to take a loss. All right. But once we see the market change character, we're not just jumping into the market because that's giving us change of character. No, that's not what we're doing. Once we see the market change character now to the downside, we want to now, first of all, identify that as a change of character to the downside. So first thing you want to do is identify the fact that the market has changed character to the downside. All right. Once this has been identified, you now want to see if this market is truly going to continue to the upside, because we said this is a definite possibility for it to continue to the upside. We now want to see if truly, truly this market, even after this change of character, will still continue to the upside. Now, in some cases, it will. Okay. But a lot of the times, the market won't really continue to the upside, especially when maybe it has reacted from something around this area here. The market was bullish before. It hit a particular level. That level could be a resistance level. It could be a supply level. We're talking about the same thing. All right, especially when it has hit a particular level before it now changed character. So you now want to see if this trend is going to continue. Now, if the trend doesn't continue, then we now have a confirmatory break of structure to the downside. Then we can now say, yes, this market has indeed reversed, because here now we can now see a clear downtrend formation. Do you understand? Are you
Oh,
here?
yes,
Are you with me?
yes, I mean, yes.
All right. So it's a very simple concept, but it's very, very powerful. So if the market is going to reverse, this is the way the market will reverse. This is the pattern that the market forms when it reverses. But what I'm teaching here is the structural formation of the pattern. What is going on in between? Why is the market doing this? Why is the market doing this? All right. Then for a bullish or for a bearish to a bullish market, this is how it's going to look like. So for a bullish to bearish, it looks like a head and shoulder pattern. I don't know if you know head and shoulder pattern. Where this is your shoulder here, this is your shoulder here, and then that's your head. So it's looking like a head and shoulder pattern there, but structurally, we understand that the market was breaking highs earlier, and then it got to a point, it stopped breaking highs, it started breaking low. So the first break of structure within this trend here is the change of character. But we said we're not selling because the market changed character. We want to wait for the market to see if it is indeed going to create a new high, because it's possible that it can continue to create a new high. And if it doesn't create a new high, if it fails to create a new high above this area here and creates even another low, then we can now expect to sell this market from here. Okay, so this will now be our expectation. We can now expect to sell it from here, because we have confirmed that we are definitely in a downtrend now, based on the fact that we have had not just a change of character, okay, but a confirmatory break of structure to the downside. Okay, we can now look to sell from somewhere around this area here. Can I say, okay, if the market comes here, that'll be a nice area to sell from. All right, so this is how the market reverses. This is how the market reverses. Now, there's another way the markets can reverse too, in terms of the structural formation now. In terms of just the structural formation now, there's another way the market can reverse too as well. Okay, so also, let's say we have the market moving in this direction. So we have low, we have high, we have low, we have high, okay, we have low. Then the market runs up all the way up and creates a high. Okay, now let's assume that the market again hits a level of resistance or a level of supply around this area here. After hitting that level of supply, now our change of character is going to occur here. True or false?
Yes, true.
That's why our change of character is going to occur. That's the last low that just created the last high. So if we are going to have a change of character, that's where the change of character is going to occur. But what you would notice is that before the change of character here, the market will already start to give you something that looks like a downtrend. Okay? For the character changes. This
So
already.
definitely.
Sorry?
So I was saying that it's going to be targeting the support region, the support zone at that time when
Yeah,
it's
yeah,
reversed.
yeah. Now I'm just saying, like, this is how the market reverses. The market can come here and still continue to the upside though, without
Okay.
breaking this. But I'm saying in a scenario whereby the market actually reverses, this is how it's going to play out. Okay, the market can definitely do something like this. Let's say it pushes like this, comes back here and continues to the upside. That's why when it comes to reversal, you want to wait to see that change of character. Okay, because if you are expecting this market to reverse, that means you already marked out a level where you think the market will get to and react from. So in real time, you're watching the market get into that level, react from the level, and drop from that level. Then if you get that change of character, that's a confirmation for you to start looking for sales. But the market can indeed, even reacting from this your level, the market can still come back here and fail to give you that change of character and still continue to the upside. All right. But what I'm saying here is, in a scenario whereby the market actually gives you a change of character, this is how it's going to play out. I'm just giving you two different structural patterns of what a reversal looks like. Okay? I'm just giving you two different structural patterns. The first one, maybe I'll draw it side by side. The first one I drew, um, where do I draw the first one now? The first one I drew was something like this. Okay? The market comes to a particular level. All right? And as it's coming to the level, it's coming with what? Structure. So you have high, low, high, low. The market hits the level, retraces immediately, and gives you that break of change of character. Then it pulls back, fails to go higher, then it drops. Can you see that this is a little bit different from this?
Yes. So
They're a
for
little
this,
bit different.
this one is actually giving me the head and shoulder pattern, isn't it?
Yes, this one is giving you the head and shoulder pattern, but this
That's
one
the
is not.
bullish confirmation.
Now, if you are used to pattern trading, you will still be looking for head and shoulder pattern here, and you'll be confused. Okay, which one is the shoulder? Is it this one? Is it this one? Is it this one? Is it this one? This is even looking like a deformed human being, whereas this one is looking more so like a normal human being, where you have a normal head and shoulder. It's the structural pattern behind it. Is understanding the structural pattern behind it that's the most important thing, not the pattern itself.
Okay.
Understanding that the market can behave like this sometimes. Okay, you can look. One thing you will notice that in this particular scenario here, the market slowly came up to the resistance level, it hit it, and it gave you the break of structure or the change of character in this case immediately. But this one, the market was very quick to get to the resistance, meaning that the market spiked, okay, and got to the resistance. This is where in the market you see a long candle to the upside, unlike here where you see slow structure going up. All right. So these are the two different ways that the market can like reverse. Okay. Hopefully, I'm going to send this particular video to you so you can rewatch it again. But let's just let me show you some of these now on the chart on gold. Okay, on gold. If you notice, we're using different currency pairs, we're using different um, asset classes. That's to tell you that the strategy is very, very universal. Let's go to the 4-hour time frame here. Now, if you look, I already marked out this area here. I definitely was expecting price to come to this area. I was expecting a reversal already from this area. So that was the idea from here now. I was expecting the market to get to this level and what reverse from this level. Okay. So knowing those two distinct patterns in mind, or knowing those two distinct price behaviors in mind, okay, I already anticipated that if the market is going to reverse, it's going to reverse in one of those two ways. All right. Let's look at the 15 minutes time frame. Let's see how the market reversed. Can you see how the market reversed there? Sorry. Can you see how the market reversed? Which of them did you use? Can you see the pattern in there right now? Can you see the pattern in there? I'm going to draw it out right now, but can you see the pattern in there already?
Yes, 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 yes.
All right, let me draw the pattern out now. So this is a low.
Mm.
All the way we created a high. This is based on the idea of structure we studied in the last class.
Yes.
This is a low. Now we are reacting from the level. Okay. Now, if this market is still truly bullish, then we should be having breaks of pullbacks and continuation break of structure to the upside. All right. But if you look at what happened here, this market now failed to go higher. Okay. It failed to go higher. Then it gave us a what? Change of character to the downside here. Can you see that? Change of character to the downside. This is a change of character. Why is this a change of character? Because we have been seeing breaks of structure to the upside all the way to the upside here before the markets reacted from this level. So after the reaction caused a what? A change of character. We are now seeing break of structure to the downside, which is a different type of vibe that we've been seeing from the trend. All right. Now, after that change of character, you can see the market failing to go higher, telling us that, okay, I still want to be bullish. No, the market is not doing that. All right. The market is giving us a push to the upside and a confirmatory break of structure to the downside. At this point in time, a trade already existed here. A trade already existed here. But of course, I didn't really see that trade at the time. This was the trade I actually saw. Because I was still looking at this as equal highs. I was still saying, okay, there's still a chance the market wants to sweep these highs before it drops. But like, as soon as I saw this confirmatory break of structure to the downside, one, and this confirmatory break of structure to the downside. This is where the market broke structure here. So if I should extend this line a little bit further, I was still seeing the market breaking lows to the downside. I was like, no, this market might not go back to those highs anymore. That's the break of structure to the downside. As soon as I saw that, I was now working with this trend that took out the structure. All right. I was now working with this trend that took out the structure. So that trend there, again, you can see I'm using the idea of trend now. There's high, there's a low, there's this high, there's this low here, there's this high, and you can see from this high, the market broke this low here. Okay, so the expectation was for the market to come back here and drop. See where the market got to, then it pull back. So that was the trade. This would have been a very, very amazing trade. That's the kind of ideal trade that you want to catch. A trade that is backed up by a system. Okay, you can see all of this here is all a pullback. All of this is all a pullback into this level. And like I said, that's where the first trade existed, because we saw break of structure number one, which is a change of character, then a confirmatory break of structure. So at that point in time, you can definitely take your trade. You can definitely take the trade based off of this. We haven't talked about other blocks yet, okay? But maybe this will give you like a sneak peek into what other blocks look like. But yeah, you can definitely take your trade at this point based off of that. And look at this trade. You can target here as your first profit as a 1 to 6 risk to reward trade in a single day. This is a day trader's dream, day trader's paradise. 1 to 6 to reward, 1 to 6 risk to reward in a single day. That's a nice trade right there. At this point, I'm just trying to catch re-entries for this particular trade. The trade is already in motion. I'm just trying to see if there's a way I can catch a re-entry. Now, this market can definitely still come all the way above all these highs. So, sure, you know.
Yes, of course.
It can.
There's a
There's a
reversal.
yeah. There's a possibility that it can come up all the way here. It can just even come and keep going up to the upside. Anything can basically happen. But there are some concepts that we are studying, and if we see the market aligning with those concepts that we are studying, then we are good to take a trade. Okay? There's some concepts that we are studying, and if we see the market aligning with those concepts, then we're good to take a trade. Now, just to reiterate, we have talked about trends. Okay? We've talked about trends. So, what I'll do. Yeah, this is what I want to change. It's kind of heavy. It's huge. Oh, this one's too small. 12? Okay, yeah, that's cool. So good. So we've talked about trends. Trend is simply the direction. If it's going up, it means that the market is in an uptrend. Now, when the market is in an uptrend, it needs to have bullish market structure, meaning that the structure of the market when the market is in an uptrend looks like this. This is what we mean by bullish market structure. Okay. Now, the characteristic of bullish market structure is the fact that price is moving from low to high. Okay. Price is breaking structure to the upside. All right. The market structure is made up of two legs, the impulse leg and the pullback leg. In this case, the impulse leg is bullish, pullback leg is bearish. Impulse leg is bullish, break structure to the upside, creates a new higher high. Impulse leg is bearish, creates a higher low. Another impulse leg is bullish, break structure to the upside, creates a new higher high. This is all about trends and what structure. So this is all about bullish trend and bullish structure. Now for bearish trend, we have this for bearish trend. So let's change the color to red. Now in the bearish trend, what do we see? We see the market typically falling from higher prices to lower prices, and the structure is as follows. This is what the structure is like for a bearish trend. We're seeing breaks of structure to the downside consecutively. We're seeing highs being formed, lows being formed, lower highs, okay, and lower lows being formed after the market breaks structure to the downside. All right. For a ranging market, I'm going somewhere with this. That's why I'm re-establishing all of this again. For a ranging market, we have something like this. You see the market ranging between a high price and a low price. So we have a high price around here. We have a low price around here. See the market ranging between a high price and a low price. The direction is not so clear. The market is moving sideways. The impulse leg and the pullback leg, they're almost equal. Okay. And we don't really have any higher highs, any higher lows. Now, any of these three trends can change. Any of these three trends can change. Okay. Now, let's start with the ranging first. If the ranging trend is going to change to a bullish market, this is how it's going to look. Okay. If a ranging market is going to change to a bullish market, this is a range. Okay. This is a range. So we're trying to simulate a ranging market changing into a bullish market. So you can see the market is ranging for a while. Then after some time, it breaks structure to the upside. It breaks out of the range. Now, for the fact that the market breaks out of the range, is not confirmation enough that you should start buying this market. No. Okay? It's not confirmation enough that you should start buying the market. You want to see the market break out of the range, not just breaking out of the range. The next thing you should expect to see is maybe a pullback and a continuation that will give you a what? A confirmatory break of structure to the upside. That's when you can start looking for a buy from around this area here. From around this area here, that's where you can start looking for a buy. Okay? From around that area there. That's where you can start looking for a buy. Do you understand? So not just that the market is breaking out of the range, then you just buy. No. The market needs to break out of the range. Then it needs to continue in that direction. All right. This is for a ranging market turning into a bullish market. You can now see that a trend has now started from where? From here. This is now the low of the trend. This is now the low. This is now a high. This is now a pullback to this low. This is now a continuation to the upside. And of course, this is the break of structure. Now, this is one break of structure when it broke out of the range. Okay? This can be considered as your second break of structure. Now, multiple breaks of structure to one direction confirms that the trend is going in that direction. We have seen two break of structure to the upside here. Number one, when it broke out of the range, and this confirmatory break of structure to the upside. All right? Now, if a bearish market is going to, sorry, if a ranging market is going to become bearish, is the exact same thing. Is the exact same thing. So we see the market can be ranging, 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 and then all of a sudden it breaks to the downside. Again, we are not just expecting the market to sell just because it breaks out. There's something called a fake out. It can break out and continue back breaking. Then this will not be a fake out. So in order to avoid a fake out, you want to see the market, okay? You want to see the market pull back into this and give you a confirmatory break of structure to the downside. Be certain that, okay, I can start looking for a sell from this area here. All right. Why? Because I can now spot structure. Okay. Or breaks of multiple break of structure. So the first break of structure is when the market broke out of the range. That's the first break of structure. Second break of structure is the confirmatory break of structure to the downside. That into this and continue to the downside. All right. Here you're expecting the market to pull back into this and go to the upside. Okay. Now, how does a bullish market reverses to a bearish market? I believe I've done that. Very, very simple. Very, very simple. Okay. The market is bullish. It hits a resistance level or a supply level. After it hits that, change of character to the downside, confirmatory break of structure to the downside, then you can now sell. Okay. Change the color of this to red. Take this. Change of character. Very, very simple. Your sell is coming from somewhere around here. because you are now operating not off the first break of structure, but off the second break of structure. Now, that's not to say that the market cannot still come here. Sometimes the market can still come this. It can still come all the way up there. Based on this break of structure, it can still decide to come all the way back there. Okay, sometimes. All right. Now, if a bearish market is going to reverse and turn into a bullish market, what's that going to look like? Direct opposite of this. Bearish market is coming down. It hits a support level. Very, very key thing. It must hit a support level. It must hit a point of interest that you must have been looking at. Then change of character. Then, continuation to the upside. Okay. All right. Very, very simple idea. Very, very simple idea. Very, very simple idea. Now, this is one of the reversal patterns now. Okay. This reversal pattern I just showed you now. These two reversal patterns. Okay. These two reversal patterns, they're kind of like one in terms of like the formation now. In terms of like the formation now. Okay. These two, they're kind of like one. This is the same with this. It's just the, flip to the inverse. Okay. This one is the inverse of this one. This one is the inverse of this one. All right. Now, another reversal pattern is the second one I showed you. I'm not going to draw the two for this one just because I feel like you understand it. So the market is going to the upside. Then there's a very, very strong impulsive move, boom, to the upside, to the resistance. Unlike the other one that was slow. This one is very, very impulsive. Then, after that reaction, we now tend to see the market forming a trend already. Now, a break of structure here has not occurred, meaning that a change of character has not yet occurred. But we can already spot a trend forming. We can be trading that trend, especially when it has hit a level of resistance. Okay? We already see a trend forming. We can be trading this trend individually like a normal trend that we will trade before the market eventually breaks this. Okay? So this is another way the market can reverse. And the inverse of this is when bearish is turning to bullish, because this is when bullish is turning to bearish. So when bearish is turning to bullish, I can say alternate I, and we're going to see this. This is another reversal pattern. So pay attention to the two reversal patterns. All right. Then now, with the idea of this, you now want to start jumping into your charts and looking for all of these things on your chart. Look at this. Look at, if this is on the weekly time frame. Look at what happened when the market reversed here. This is on the weekly time frame. Okay. This weekly time frame to show you that the market structure is the same everywhere. Can you see what happened here? There was a reversal there, is not? A bearish trend turned into bullish here. True or false?
Yes, true.
Bearish trend turned into bullish there. What happened here? You can see how the bearish trend was coming down. All right. So from low here to high there, to low here to high there, there's a break of structure here. Okay. All the way back to high there, there's a break of structure here. From this low all the way to this high, there's also a break of structure here. I don't know, it's giving very, very messy. Let me do it in a more mature way. All right. So, oh God. Part 2. So we're looking at this low all the way to this high. I wanted it to be perfect, but I'll come back for it. Now, around this area here, the market has not broken structure here, so I can't pick this as my low. This is where the market took our structure to the downside before it pulled back again. That is my low. All the way to whatever high it formed, that's my high. Come on now. This is my high. Around here again, the market has not broken down. It has not given break of structure yet. I know this is a low and this is a high. But here, the market has not broken structure, so I can't classify this as my lower low yet. This is where the market presented a lower low. Right here. This is the lower high. What do I find there? Another lower low. After this, the market must have reacted from a particular level. It just didn't buy by random. No. It must have reacted from something, a key level, a support level, a zone, a point of interest, a demand level, like it must have reacted from something. Then it now changed character to the upside. As soon as it changed character to the upside, remember we said we're not buying yet. Although this is the weekly time frame, I'm just showing you that the structure is the same. Okay. In this particular case, you would be waiting a lot of weeks before you can catch the trade. All right. However, okay. However, this is the same type of structure you see on across different time frames. So your trade typically will be here. Now, you know that if this market fails to create a new low, let me stop this here. If this market fails to create a new low, you know that this market should create a new high. So this is where your trade will be. The market should create what? A new high. Something like this. Let's change the color of this to blue. That's our expectation. Now, how did the market fulfill that expectation? Can you see that as the market failed to create a new low here, it now started trending to the upside here? Let me drag it like this. Now, what did I say about structure? You can trade the structure you can see there. What structure can you see? This is a low. We have a high there, right? This is a bearish candle, a low. Then we have what? A break of structure. As soon as you see a break of structure here, is that not a trend? Your buy is coming from this candle here. This is where your buy.
It does have two bullish engulfing candles side to side.
I'm not necessarily using the engulfing candle. I'm just following the structure.
Okay.
I'm not using candle or anything like that. I'm just following market structure. All right. So this is where your buy will come from. I don't want to them. I mean, you can check for candlesticks pattern to as confluence, but that's typically where your buy will come from. Now, like I said, this is the weekly time frame, but its structure is the same across all time frames. So even if you go to the 5 minutes time frame, 1 hour time frame, this is the exact same type of structure that you see. Okay, so your buy, take profits somewhere around there. That'll be your take profits. Okay, now you can see how the market came all the way to the top there. All right. Now, there's a reason why the market came back down here, but eventually you can see how it went further to smash the take profit. Okay. Even as it was going, look at structure. Even as it was going up, can you see the structure? High, low. There's a high here. There's a low here. The market broke structure to the upside here. It pulled back to this, what's it called? Higher low area. That higher low created a higher high. After all this time, it created a higher high. It still came back all the way down to somewhere around here. This one, look at the structure again. This was supposed to create a new high, but how will you do that? High, low, high, low, high, low. Inside there, there's structure here. Look at this. There's a trade here. This is on the weekly time frame, oh. But I'm just showing you on the weekly time frame because, like I said, market structure is fractal. Okay, what I mean by a structure being fractal is the same structure you see on the weekly time frame, monthly time frame, higher time frame is the exact same thing you see on the lower time frames. Like market structure is market structure. We can't see bullish market structure like this. Okay, we can't see bullish market structure like this on the weekly time frame. And then we go to the 1 minute time frame and we're seeing a different representation of bullish market structure. No, this is what we still find on the 1 minute time frame. That's why I'm saying we're just using the weekly time frame just to show you that okay, structure is structure across different time frames. All right. But you can find this on any time frame. As long as you know the relevant trend that you are in and you know the relevant structural leg that you're playing within. All right. I mean, we're going to develop a whole trading plan and a whole how to use all of these things. So it's not like I'll just show you all of these things and then you just gonna figure it out on your own. No, I'm going to show you a whole, a very, very systematic way to utilize all of this. All right. But for now, we're just touching the concepts individually. We're not rushing with it. And this is the beauty of one-on-one mentorship like this. We don't have to rush. There's nowhere we're rushing to. Okay. So we just have to develop these concepts so that now when we're piecing everything together, it will now make sense. You see how I'll be calling upon all of these concepts one by one and be using them one by one. Okay, the concept of structure now, I'll call upon it. The concept of other blocks, I'll call upon it. All right. Internal and external structure, I'll call upon it. That's the next thing we'll do anyways. Internal and external structure. So for now, we just touch on structure again, and then we talked about change of character, and we talk about okay, let's just say we talk about reversals. We talked about reversals. How a change of character is the main catalyst for a reversal. A change of character is the main catalyst for a reversal. When we say change of character, we can expect a reversal. Even this one here now on this time frame, I'm still expecting this to maybe still pull back up to this and still sell. That's still a very good thing to expect here. Okay, still a very good thing to expect. But we'll see how this one plays out anyways. Some other things I'm looking at. Whoa, I told you, bro. I told you. Fucking hell. I was just on a call earlier with my colleague, and I was telling him that this is going to like again. Look at the reversal pattern, bro. What can you notice about the reversal pattern? Can you see what happened there? Can you see what happened there? We just talked about this. This is Euro USD. We're looking at gold, which is a commodity. All right. We just talked about this, and this is playing out right now, just before our very eyes. Are you still with me?
I'm listening with you.
Can you spot the pattern?
I'm looking at it honestly just to understand what you've taught me.
Just take a minute. Just take a minute to look at it.
Gotcha. Okay. Yes, I've seen it. So this was bearish before, but
Exactly. It was bearish before.
it took a
You can
turn
see the
immediately.
bearishness. There's a break of structure here. Okay. There is another break of structure here, which is establishing the fact that there's a downtrend going on there. Now, where is the downtrend? I can say from this high, we took our structure here. We pulled back here, then we took our structure again. Now, before this high was taken out, let me pause here for now. Before this high here was taken out, what did we see? You can see a trend. Before that high was taken out, you can see a trend. I mean, trust me, I didn't make all these things up. These things are from very, very detailed observation of these markets. There's a high here. There's a low here. What can we see? There's a break of structure to the upside here internally. I know we haven't touched on internal and external structure yet, but like the reason why I'm saying this internal is because look at this. This is the high that broke the structure to the downside that caused the last low. This is the last high that caused the last low. So if we're going to have a change of character or a break of structure to the upside, it should be on this high here. But before character changes, we can already see a trend forming. We can already see a trend forming before character changes. And an entry can be right there. Okay, so now we can see the market from this high. It pulled back into the entry. Another break of structure confirmation. Another pullback into this, which is a second entry. And now this is playing out. We have indeed had the change of character now. So maybe after the change of character, we can now expect maybe pullback, then a continuation to the upside. Very, very clean trade. Very, very clean trade. I'm very sure GBP USD is doing something similar. I mean, come on, man. It's
So
reacting from a daily level.
I have a quick question for you,
All
right?
right.
For me as a beginner, right, what pairs will you say I should stick to just to continue to observe and trade as a beginner before I grow out of there?
Here's I'd say Euro USD. Euro USD is one of those pairs that you might want to be looking at. Um, GBP USD as well. Euro USD, GBP USD, maybe AED USD. Well, you can look at any pair of your choice, to be honest with you, but like as you're looking at any pair or different pairs, you as the observer of that market, there are certain things you're taking note of. Okay, there's certain things you're taking note of. I can show you things that I've taken note of myself personally on these pairs, but the truth is, you have to have that ground experience too on your own. All right. That's the reason why, it's good to have all these videos back to back because I'm basically giving you my knowledge now. So you can, watch how I do things and everything. Then when you're looking at these pairs on your own, you start looking out for these things. And if you start observing the same things, then we're on the same page. But obviously, there are other things, there are other behaviors of different pairs that I'm just giving you the base market structure. So this is how market structure works. So when you start applying market structure to different pairs, you will now start observing the behavior of these different pairs. All right, you start observing the behavior of these different pairs because now we're looking at GBP USD, Euro USD. The behavior is slightly different from gold. Okay, the behavior is slightly different from Bitcoin. Bitcoin's behavior is slightly different from Ethereum behavior. All right, but you can utilize market structure and trade anything. Now, we're not saying the strategy works 100% of the time, but it works more times than it fails. Okay, it's not like it's 100%. It's not like it's a holy grail that it must work every single time, but it just works more times compared to when it fails. I mean, we're just looking at this chart together not too long ago, and it's crazy to see how it's already playing out like crazy right now. I mean, I don't necessarily need to put all of these things in, but when I'm teaching, I like to put it in just to show you exactly what I'm seeing. So what I'm drawing out here is exactly what I'm seeing. I'm basically giving you my eyes right now with all of these diagrams. I don't necessarily need to put them. As soon as I look at the charts, I can already see, structure. And trust me, I see the markets in different ways, right? But this is why I see the markets. I see the markets in different ways. I see those, support and resistance levels. I see those, trend line levels. I see those even Fibonacci levels and stuff like that. But like the market just moves with structure. I don't know. Like it just moves with structure. Them would make price reverse. Not this one, anyways. I believe this one will be taken out. I believe that one will be taken out because there's liquidity there. We haven't talked about liquidity, but I believe this level here will definitely be taken out. Now, we're looking at either this level here or maybe some levels at the top here. So a level such as this, okay, is another level we can, be looking for a sell. All right. So as I was saying, I see the market differently sometimes. I can plot my Fibonacci in here right now. I can plot my Fib here, although we still haven't gotten to these levels yet, but like I can plot my Fib is a tool that we use to calculate the pullback. Okay. Now my Fib is aligning with these levels here. So this is giving me reasons to believe that, I can sell this market from these levels here. Okay. This is giving me reason to believe I can sell the market from those levels there. Now, but mind you, this is where come on, I don't want to make this too complex for you right now, man. I think it's getting too I think it's getting too complex right now. So let's just call it a day here, man. We're gonna establish most of these things later on. We have time again. We have time. We're going to establish all of these things. Okay, we're just getting started with technical analysis, talking about market structure. We haven't gotten into internal and external market structure yet. We haven't gotten into liquidity. We haven't gotten into imbalances and fair value gaps. Not that you need all of that to trade, but you just need to be aware of them. I can teach you how to trade using just structure. I don't even have to mention liquidity. I can just show you, okay, enter from here, even without mentioning liquidity, fair value gap, and imbalances and all of that. I can just do this with market structure and demand and supply levels, which basically are order block levels. Okay. Market structure and order block. I might not even need to mention liquidity at all. And I know, if I put this out on YouTube, a lot of people are going to call me out on bullshit, for saying that, you can trade with just market structure and order blocks. But the truth is you actually can. You actually can trade using just market structure as your guide and order block as your points of interest. And I'm not saying point of interest because that fits into the smart money concept, strategy, narrative. I'm saying point of interest as per this is actually a point of interest, like literally. This is a level that I'm interested in, that when the market gets to this level, I'm looking to take a particular action. All right. So you can have a bullish point of interest or a bearish point of interest. A bullish point of interest will now be a support level or a demand level. And then a bearish point of interest will now be a resistance level or a supply level. And you can keep it that simple and just trade off of market structure, demand and supply, or market structure, support and resistance, depending on what your idea or your understanding of support and resistance is. Okay. So yeah. So again, I believe in the reason why I did a lot of recap in this video was because we lost the first one. So you can always watch this video. Now, I would advise you to watch this video while you're going through your charts. Okay, pause the video, do some exercises, come back, watch the video again, pause the video, go back, do some exercises, come back, watch the video again. Look for these things on your charts. Look for these things on your chart. Look for that bullish market structure. Look for that bearish market structure. Look for areas whereby a bullish market structure change to a bearish market structure. Observe the change of character and things of that nature. That's the first place to start from. Observe these things on your chart. Start getting conversant with them on your charts. So as we keep developing the idea, it's going to be like you're peeling back an onion. Like you're unraveling things that were there before, but you were not seeing them. Okay, muscle memory is very, very important. All right. Now, let's say we end this mentorship program, and during the same time that we would have been having a class, maybe you're using that time now to just like these 2 hours now, you're just using it to like study the charts. Let me even look for this bullish market structure. Let me look for this bearish market structure. Let me look for all this change of character. Let me look for maybe another block. Let me look for liquidity. Let me look for fair value gaps. All of these concepts, let me just look for them. Let me try Fibonacci on this range of the market. Let me try, different tools, different indicators and stuff like that. Combining them with market structure. And trust me, it wouldn't take long before it's going to click. It wouldn't take very, very long before it clicks. All right. It wouldn't take long before it clicks. So yeah, that'll probably be our class for the day. Again, just look at this. We are seeing structure now. I'm now working with the most recent, leg of structure. You can see there's been a break of structure to the downside. So naturally, I'm expecting the market to pull back into this range and sell. It's as simple as that. Pull back into this range and sell. Now, I truly don't know where the market can get to. It can get to this level, sell from here. It can get to this level here, sell from here. I truly don't know where it can actually sell from, but I know it should sell if it's going to. Again, even if it's going to take out all these levels here, it's going to do it in some structural way. Like, even if it's going to invalidate all these levels, right? It's still going to do it in using some form of structure that will show me that, okay, it's really not respecting these levels. So I'll be able to see that the market is coming into these levels